Hello everyone, hope you're all doing well. So we're going to dive deep into liquidity and manipulation because it's really important to know, because if you can't see the liquidity, then it makes it really hard to actually be on the right side of the markets, um, because the markets are heavily manipulated and it is set up for you to lose. So you need to know exactly what liquidity is and how we can mark it out on a chart. So if we get into it, the markets need to generate liquidity in order to move. So if liquidity isn't already there, it will be created. Um, so when new traders come in to Forex and learn about it for the first time, what they usually do, and what I done, was search on YouTube, and what's the first thing that usually comes up? Well, it's going to be retail based trading, so support and resistance, chart patterns, which are extremely popular in the industry, and things of that nature. So 4 to 5 years ago, when I got into trading, support and resistance and indicators what I was being taught. I think the strategy was based off of moving averages. So I think it was a 10, a 50, and maybe a 200 or a 20 moving average, and also a stochastic, which looking back at now is quite funny to look back at, because obviously the progression, has been crazy. So what some brokers do is they offer free education for their clients once you start trading with them. Um, Now this education will usually be, retail methods like support and resistance that we just spoke about. So why is this? Well, it's simple. They want to generate liquidity into the markets, because the majority of traders are trading this way. So these retail methods are not unknown to large banks and people with large interests. Of course they're not. All this information is out there for free for anyone to go and search up. So if all this information is available for free, don't you think it's wise to assume that these people with huge amounts of money, endless amounts of money, they're going to use it against the majority of retail traders in order to manipulate the markets? So I want everyone to be aware that these markets are very much rigged. I don't care what you say, that is set up for you to lose long term. It's all manipulated, but as long as we know this, it's actually a good thing, because we have an advantage and we can work around it, and we can stay away from the retail side of trading. Now, the majority of us have learned all of these retail methods. I know I have, many years ago. So we can try and rewire our brains and do what the majority of others aren't doing. So when we dig deep into chart patterns like the double top, double bottom, or bull flag, bear flag, which retail traders absolutely love these patterns. We need to understand they're all manipulated, and they do work, but only when you really know what you're doing, and how you can trade around the manipulation. Because there's a few people who talk about mass psychology, and as long as you know what's going on and the mass psychology behind these patterns, you can still trade them, definitely. So what traders are taught is to sell at double tops or buy at double bottoms. If we know this, and large banks know this, what does that really mean? Well, it means that there's a lot of liquidity above or below these areas. So there's a lot of liquidity above, a double top or a triple top, quadruple, whatever, and there's liquidity below double bottoms. So that is why, we know double tops as equal highs and double bottoms as equal lows. We expect price to be manipulated at and around these areas. all you need to do is go back and look at the data because it is all there. So once we see large moves up, sell side liquidity will usually need to be swept or generated beforehand that allowed that move to actually, impulsively move. It basically fueled the move. The same goes for when we see large down moves. Buy side liquidity will usually need to be swept or taken out prior. So now we've gone through that, what I want to go through is this little pattern that I've created. And what we can see from this pattern is price was pushing up, which looks like an ascending channel. Most retail would see this as an ascending channel. Price, then we had this high, we pushed down, pulled back, pushed down, showing a little bit of a slowdown in this uptrend. And then price pushed down to this low. So essentially we have a double bottom here, and price then pushes up to this high, which is a double bottom. Now, a lot of people will be looking, to potentially get short from here. So if we know that, I've got some drawings on. So once, we get a nice rejection from this double top and a nice retrace, this looks good for the majority of people, because I know I did trade like this, not exactly like this, but this is sort of the methods behind it. So prices come up, but we failed to break above this double top, or as we know it, equal highs. And we've got a nice retrace candle, which again, retail love a retrace candle because it's showing potential move to the downside and rejection from an area. So now that we've got a rejection from this double top, people are looking to sell this. And when people are looking to sell at double top, where are their stop losses going? Well, they're going above the double top. Like, clearly they're going above the double top. There's nowhere else to put it, really. They're not going to be, having it right up here. It just doesn't make sense. So retail are taught to put their stop losses, above double tops or below double bottoms, and then expect them move down. So that is exactly why there's liquidity at these areas. Okay. So that basically means that a lot of stop losses are at these areas. Now we can't just be 100% positive that there's stop losses here, because we don't know. We don't actually know. No matter what someone says, we're just assuming, but the data is there for anyone to go and see how this works on, the charts day in, day out. So once we get this, we're looking to enter now. And what we usually see is we will see price push down a little bit, enticing people into the market if they're not already in from this retrace. They're getting FOMO, they're seeing the double top, they're looking to get involved maybe on this next candle, with a stop loss a bit wider. But we know this as equal highs, and we've also got equal lows. So we've got liquidity below here as well. So what's likely to be going on here? Well, we're likely to come back up. Now, from people who are in the sells, if they're well risk managed, then they may have moved to break even, but it's unlikely. This is what's going to happen more times than not. We're going to come up, seek all of this liquidity, which basically is just taking money from all of the people in the sells, which helps to fuel any potential moves that are going to happen in the future, which is likely still going to come down. But now that we've taken liquidity from this wick, we have a reason for price to potentially come down. Okay. And this is what we usually see. Okay. Once people are stopped out on their sells. Now, what we also have with this is breakout traders who look to set an entry. It's the wrong color, but they look to set an entry on the breakout of a potential area. So we're essentially grabbing sell side liquidity as well and buy side liquidity. Now, you'll see this a lot. See how we got some really huge momentum after that liquidity grab. This is not uncommon. And if we also see what happened before, I know this is just a drawing, but this happens on the charts, which we get into. Now, before price came back up to take this liquidity here, we had equal lows down here, and you can see we spiked it below. So essentially, we actually took liquidity from the sell side, from anyone looking to sell a breakout from this double bottom here. But if we also look left, what we can see is what we will usually see on the charts is price breaking below a double bottom or equal lows, which is tapping into an order block, which is seen on when we look left with price action. We can see we broke structure above this high, last down candle, price wicked in, grabbed liquidity, mitigated, pushed up, grabbed liquidity, and then we have a reason for price to move to the downside, as you can see. So what I want to do now is go through Euro USD and show you exactly this thing that we're seeing here, manipulation, and look at it on the chart. So let's get into that now. So we're now on EU on the hourly time frame, and I'm just going to go through a bit of price action and go through what I'm seeing and how retail would be looking at potentially entering trades. So if we look at current price, we can see we're clearly bullish. Price is trading above these lows every time after making the new higher highs. So I'm just going to go through price and we'll go from there. So we have a higher. Now I can already see, price is starting to slow down. We're ranging. We're staying within this high and this most recent higher low. But we're clearly, building liquidity before, the markets get manipulated. So we have this high here. Price has come above it, but closed below. We've wicked it. So we have a retrace candle. Price then pushes down. Now what I would be looking, I say but I'm talking as a retail trader. This is clearly, ascending channel. We have this correction. We also have this high, price pushes down, a nice ascending corrective move back up to that double top. As you can see, we could even put in a little trend line here, something like that. Now, let me just zoom in, let me run it forward. Okay, so we see a nice impulse down. Now, I've never ever traded head and shoulders patterns, but I guess you can say, I'm guessing this would be the head, shoulder, and the right shoulder, it's left shoulder, and I'm guessing this is the neckline. We've broken it, so traders will be looking for break and retest. So if we just mark that on, we've had a break of this trend line, a nice impulsive break, and I'm going to mark on this as the clear break. So where would entries be? Well, we've had an impulsive move. Maybe at this low here, okay? Now, I'm not a retail trader, but this is, it's clearly impulse down, head and shoulders type feel to it. It's not unlikely that people are going to be looking, well, it's likely that people are going to be looking to short from here. Okay, so price pushes down, we push back up. So we had a break and a retest. Stop loss can be, I don't know, 20 pips above that high. And we push down, but then we get tagged out. So what's likely to happen next? Well, we've had a fake out, but what has this tapped into? Well, as we just looked on the diagram, if we look left, we can see we broke structure, which, as you know, leaves behind, an order block, which, yeah, granted, we did wick below, but it was likely tapping into, maybe this wick, because we did break structure here as well, last down candle. So we would be noting this down if we was looking to trade this. So that's what price was doing, pushing down into that. But now I'm just gonna move this along, because this would be, an area of resistance. We also had some support, you could say, from here. We broke it. Maybe it's turned resistance. I'm not too clued up on support and resistance, but this is the sort of idea that what people are trading. So we're now trading at that resistance. So what's likely? Well, we've had that rejection, nice retrace. People are selling here. There's a lot of people selling at these areas. What's likely to happen? Well, we're going to come up and we're going to take that liquidity from these highs, grab that money from stop losses, and now price has a reason to potentially move down. And what do you know? Look at that momentum. The reason that we can see momentum like this is because we have fuel. We basically have fuel after grabbing all this liquidity from this area here. Okay. Now at this area, look how price broke. We broke here, but we pulled back in. People are also selling here. We have breakout traders looking to go long. Stop loss back inside. They get into profit and it flips on them. So we're taking liquidity from both sides, buy side and sell side. So let's keep going. So what's likely to happen now? Well, price has a reason to come down, but what can we look at for a potential entry? Well, we can look at what we have here. We have some untested areas. We have this last down candle. Let me just move this, put that on. Okay, so we have an order block because we broke structure. Just like that. Last down candle. And we also have an area here as well. So I won't put on too much, but I will just leave that to the side. We can see we have an order block that broke structure impulsively. Okay, so these are areas where price, could actually react from. Okay, so if we move down, you can see the momentum. We have a bit of correction here, but you can see the overall momentum. And it's all down to the fact that we had this liquidity sweep from here, which can fuel the move down, breaking, these lows, and essentially tapping into an actual area where, large institutions are looking to get involved. So we come in and you can see how price has reacted. So these are areas where us as smart money traders are looking at to get involved in a trade. We're not looking at these retail methods, seller resistance, ascending channel, break and retest. It's all, you can see how price pushes up above these highs, pushes down below these lows. You can clearly see how it's all manipulated and worked against what the majority are taught, which only makes sense. If the majority are taught something, then is it likely that it's going to work out? Probably not, because it's all about money, isn't it? Everything comes back down to money. So back to this order block here, you can see price tapped in, mitigated, and you can see, if I just zoom in, now these little breaks in structure are just mitigations on a lower time frame. So you'll see this as breaking structure, mitigation, breaking structure, mitigation, which we can get involved in these trades from down here on a lower time frame, with stop losses really tight, with the expectation of essentially targeting back up here, because there's no reason why price won't come up here. We are still bullish, even though we have momentum here, but it's about looking at why momentum was caused and what price has come into. Now, granted, we could potentially take some sells in here, down to these areas, definitely. But the point is, price has now taken liquidity, tapped into a high level of interest. So there's no reason why we can't be targeting up here. And you'll see the momentum that kicks in now, because price has a reason to actually move. So a bit of correction, but then we see some heavy momentum. And if I just take this bit of price action, what I can see is this is momentum, as you can see, which broke structure. So we can note that that's broken that structure there, and that leaves behind the last down candle, but then we can take the candle before the momentum, which is here. So we can look to get long from here. Now I'm not sure if price will tap in. I haven't quite seen this bit, but it's likely to think that price will come back down, fill the imbalance, mitigate this move, and then continue. Now, not everything's concrete. Trading smart money doesn't mean we know exactly what's going to happen. We have a great idea, of course, but losing trades will always still be there. So, okay, so we come down, we do a wick below, which I didn't see, but we do have a wick. So this wick here is just a lower time frame order block or point of interest that we can look at. So that's what price was doing, mitigating that wick. And if we continue up from here, I wouldn't be surprised. Okay, so there we go. Again, we have momentum because price has a reason. It has a reason to move, okay? So just looking at price now, we also broke structure again to the upside. We had this last down candle, which granted is very large, but we can refine on a lower time frame. Price respected it and then pushed up. But this is basically, this is how you need to be viewing the market as well, because if you can maybe think like a retail in the respect that what are they seeing, we can use it and essentially do the opposite. So we can look out for the liquidity grabs, the equal highs, equal lows. Think about what a retail is seeing. So ascending channel, corrective move back up to the double top, a break of the neckline from the head and shoulders, a retest, short, no, it goes long. Sell at resistance, oh, it breaks, oh, buy at the breakout, oh, it comes back in. You know, we can use it as a really, really great advantage, and then look to see, you know, where the smart money gets involved, which is at these areas, and yeah, be on the correct side of the market and take advantage of some incredible trades. So I hope you found this liquidity and manipulation video helpful. If you did, let me know. And what I suggest you do is go through your charts and literally just do what I'm doing and just look to see where's the double tops or equal highs, where's the liquidity, where is price manipulating, and just study it. And once you see it and keep doing it every day, you'll be able to spot it, you know, easily, and you'll have that aha moment, and you know, it's onwards and upwards from there. So thanks for watching, and I'll see you in the next video.